Hello and welcome to another session. I want us to take it from where we stopped on stock exchange, which was a topic in our unit, Commerce 2. So we defined what is a stock. So now that you know what we mean by a stock, let's go straight to the stock exchange. And when we talk about stock exchange, this is an organized market where the second-hand securities that have been listed may be bought and sold in a safe and quick and also convenient way. So when you talk about second-hand securities, what we mean by a security is an asset or good that can be tradable or an instrument that can raise capital for any public investor or any private market. So when we talk about stock exchange, they have to be listed, and that's why I said last time, mostly during news, after the normal news, we have what we call the business news, and during the business news, the companies which have listed their stocks or which have listed their shares is when now they announce about those companies. So whoever is interested in the public can buy those shares. And I said the best timing to buy shares is when the price of these shares have gone down. But the time when you want to sell shares is when the prices of the shares have gone up. Because when you are buying the shares and the prices are down, you are going to get yourself a lot of shares. You are going to acquire a lot of shares when you buy them when they are in minimal prices. And again, you wait until the prices of those shares shoot. That's when now you are going to sell shares so that you can get a good amount of money or good amount profit from the shares you had bought earlier. And we said a share is just but part of ownership of any company. So for example, if you have bought like 100 shares from not 100 but 10 shares from Safaricom, you cannot say that you are the owner of that company. You are just but a shareholder of that company. So in case the same company is selling their shares, you can communicate to them so that they can include your 10 shares to the stock exchange market. But maybe you are not interested with the kind of prices they are offering currently for those shares which they are going to sell. You can also postpone the same and wait until those prices shoot so that you can sell your shares and earn yourself some profits. So I've said a security is tradable or an asset which can bring about money or can raise capital for the public or the private market. Let's go to the other vocabulary which you can get in the stock exchange. We call it the equity or the shares. And again, I said a share is a part of ownership which gives the owner a right to be called a shareholder. And that's why I've said if you have some shares from a particular company, it doesn't make you the owner of that company, but it makes you to be a shareholder. So a shareholder, you can be involved during the meeting, or sometimes if you have those less shares, it's not a must they call you during their meetings when they are called their shareholders. Sometimes they can also send you the minutes of what they concluded during their meeting if you have just the less shares. We have what we call a debt. So these are the types of securities. Sorry, we are talking about the types of securities. So the types of securities or something which can bring up money or can raise capital for the public or the private market. We have the equity or a share, and equity or a share is ownership or a stock which provides ownership or the right to be called a shareholder. And then we have the other type of security, what we call a debt. A debt is a loan which is repaid with periodic payment. So that is the second security, and the third security is what we call the hybrid. And the hybrid combines the aspect of both a debt and a equity or a share. So note that with the stock exchange, it standardizes investment, allowing people to buy and sell or the equal shares of ownership in various companies. So the stock exchange, it facilitates the transfer of funds between an investor. An investor is someone who has just decided to buy those shares and invest in them. So regulating as necessary to provide the maximum safety for everyone who is investing in the market. So stock exchange will allow anyone who wants to venture in the business area and make profit from buying and selling of shares. We have the features of shares. One, we have it's a mark for second-hand securities, and that's why we have said those shares, when any company puts on they want to sell their shares for this price and all that, it is something which has been already used. It is not something which is new in the market. It is something which has been used, and that's why we have said it's a second hand. The second one is basically a mark for the second hand listed securities of a company, and that's why I've said during business news, any company which wants to sell their shares, they usually list them, and the shares which have not been listed can never be taken to the stock exchange market. And that's why I've said, if for example you have like 10 shares from Safaricom, they usually inquire from you whether you want to sell those shares this period, or you have to wait for another period when they'll be selling their shares as well. Another one is it allows dealing only with the listed securities, and that's why I've said, for example, I have 10 shares and my colleague has 20 shares. If for example I called them to sell or to include my shares in the shares which they are selling already in the market, but my colleague did call them to include their 20 shares, they cannot sell those 20 shares which the owner has not confirmed yet whether they can sell them. They will only deal with my shares which I confirmed, yes, I'm interested, go ahead and sell my 10 shares. Another one, it is an organized market which deals with securities, and its activities are governed and recognized as a recognized code of conduct apart from the statutory regulations. When we talk about statutory regulations, what the government has put forward for the stock market to make sure that they are running their business in line with the government rules and the regulations. So apart from what the government has given to the stock market to make sure that they are conducting their business according to those terms which the government has given, also the stock market itself, they have their own governing rules, which of course the shareholders must abide to. Then I talked about bonds last time, and I said a bond is a loan. You can also say a bond is also a loan that a company or a government pays back in a fixed rate of return, and is a safer investment than what we call a stock. So sometimes you've been hearing about the Eurobonds and all that. So that's what we call a bond. So it's a loan which can be payable. It can either be a long-term loan or a short-term loan. A long-term loan can be take 2 years and more, but a short-term is like 1 year and below. So that's it for today. We shall take it from there.